Welcome, it's denome. Last November, I told you guys that there's a token called Gas token that you can buy when gas is cheap, and you can speculate on the price of gas going upwards, and you can spend this token to get basically a cashback on some of your gas usage on Ethereum blockchain. And this token actually went from $0.31 to now $1.48. So that's a 5x gain on your capital if you got this token. I only got about 50% gain on this token, and then I actually sold it off. So I did not ride the whole wave. But now there's a new token out there that will actually allow you to get 90% cashback on all gas usage on Ethereum blockchain. You can use it on Uniswap, OneInch Exchange, SushiSwap, MakerDAO, for voting, for anything you do on Ethereum system. This token keeps a track of your gas spendage and will give you a cashback just by holding this one token. And it is not Gas token. So in this video, I will explain exactly how that works. So the potential is quite mad in my opinion, because Gas token, it went 5x already, but this new one gives you 90% cashback. The only thing you have to do is simply hold it and it will give you the cashbacks. So what is this token? How does it work? It is a token that is made by the unidexbot team. So this bot here, it's a trading bot that is working on top of Uniswap currently. And I've been using this for a while, and it's a really cool bot, but it spends a lot of gas as well. So I actually stopped using this for a while because the gas fee on Ethereum went so unsustainable that I had to pause it for a while. So I did pause it for a while. As you can see, I already refilled it, and you can use this new Unidex gas token on this bot as well. You can use it on any other system as well. So that's pretty cool. And the token I'm actually talking about is called Unidex Gas. And this is so new that you cannot even find it on LiveCoinWatch, or you cannot find it on CoinGecko yet. So that's why I wanted to make this video right now, is before basically anyone else has a chance to tell you about this token. So let's go forward what this actually means, or what it is. So the first thing I want to tell you is that it had a pre-sale, and I did not participate in this pre-sale. I was talking with the developers. They told me about this token before it was launched, and I just was stupid. I did not understand how it works, so I did not participate in the pre-sale. So some people in my Telegram group actually were using this and told me like, hey, denome, you should actually take a look at this because it works. So now I've taken a look at it, and that's why I'm making this video as well. So they collected 510 Ethereum, and this is the dashboard that is currently working. So as you can see, I went to Uniswap and I bought 17.86 UNDG. And since the pre-sale, the token price already went up about 70%, and I still believe it has much more upside in the future as well. So this is the amount of UNDG. That's about $4,000 with current price. So with this amount of UNDG, I can get daily cashback of about 85 USDT. And this is the amount of cashback that I got today already. And it will be claimable in about 48 hours. That's when I can start claiming these tokens as well. And I haven't had that 48-hour window to use this yet, but I just wanted to launch this video before anyone else has the chance to do so before me, basically. So anyway, let's go to the white paper, and I tell you how this works and how it can be sustainable and so forth. So this is the white paper. You can actually download it here on this website, and I highly suggest you do, because I will be throwing some numbers at your face, and some of it may go over your head. So you can watch this video a few times, or you can download the white paper and try to understand it on your own. But for now, I will explain how this works to the best of my ability as well. So how this works is that when you hold this token, you get 2% of the value in cashbacks based on how much gas you use. So let's say, like me, I have $4,000 worth of the UNDG tokens here. What that means is I get 2% of that in daily cashback, up to 2%. And if I only spend 4.76 USDT like I have today, and not the whole amount, I will not get the whole cashback. So that's only the potential cashback that I can get. So that's how it works. And let's go forward here. yeah, okay, I'll talk about the tokenomic or the token distribution. So the first thought that you might have is that this is an inflationary token, but that's not true here. Actually, they have a limited supply and the whole supply is already in the market, so there's zero inflation on this token. So everything is working through fees. So initially in the token sale they released 3,500 tokens. 3,500 tokens went to the rewards fund, which is the critical piece for this. It will become more important as I go forward for this presentation. 1,500 tokens are in the liquidity pool on Uniswap. 750 are for the team. 750 is used for marketing as well. And now we'll talk about the sustainability. So like I said, this will use fees to make it sustainable. So how it works is that there's two kinds of fees. The first is a 4% fee every time you transfer this token from wallet to wallet. So you do not want to be transferring this token back and forth, because every time you do, you lose 4% of the value, and the 4% fee will go to the rewards fund, which will be used to fund these cashbacks. Weird word. Anyway, that's the first thing. The second one here is that every time you buy this token on Uniswap, there's another 4% fee. So like I did, I used about 4 Ethereum to buy these UNDG tokens here. If you want to get let's say 0.5 Ethereum here, you will get 2.51 UNDG tokens, but you will actually not, because you will get in reality 4% less tokens. So I've already made the calculation before I made this video one time, but I made this again now. 2.51, that's the amount that you should be getting, but you will actually get 4% less. So you have to times it by 0.96. So you will only get 2.4 tokens instead of 2.51 tokens. And the 0.1 UNDG token that is lost is now given to other people as the cashback reward in the future. So that's the first kind of fee, or this 4% fee is the first kind of fee. The second kind of fee here is that there's a claiming fee. So initially you will get 100% cashback on all gas that you use, but whenever you actually claim that cashback as a reward, 10% of that will be taxed. So that's why I told you that you will get 90% cashback for all the gas that you get, or all the gas that you actually spend. And that 10% tax will actually go to the person who has referred you. So if you use a referral link, you will get a 10% tax, and that money will go to the person who referred you. But if you are not using any referral link, then that 10% cashback will go to other people who get the cashback fee in the rewards fund. And for now, there is no referral link. So that will come about a week from now. So I promised to make this video already, but I do not have a referral link for now. So if you watch this from about a week from now, there is a referral link down below somewhere, so you can use it to help this channel out. And the team actually promised to compensate me for this video. I don't know how much yet, but they promised to give me something for making this video already. So I will get some money for this video, just so you know. And there are some examples here. So if you hold $1,000 worth of UNDG tokens, you can get up to $20 cashback per day. If you hold $5,000 worth of UNDG tokens, you get $100 per day as a cashback. And I own a little over $4,000 in cashback in UNDG tokens. That's why I get the $85 per day as potential cashback. That's how it works. And if you want to hold more UNDG tokens, you can get more money as cashback in the future as well. And also, if the rewards fund is actually growing more than is required, they will use some of that money to put back into the liquidity pool of this trading pair. So it is good for the community who hold this token, that they will be actually wanting this token price to actually go up in the future as well. And each day, the rewards fund, it will either grow or decrease depending on the buy volume, how many tokens are held in people's wallets, and how holders use their total daily spent max limit, which is the limit of 2% per day. So now let's go to the actual examples, because this may sound a little bit weird. So this is the example here. Like I told you before, initially 3,500 UNDG tokens are in people's wallets after the pre-sale. 3,500 is in the rewards fund, 1,500 are in the liquidity pool on Uniswap. So let's say in the first 24 hours on Uniswap, 2,250 tokens are bought, 1,500 tokens are sold for the first 24 hours. And this is basically me buying these tokens as well. So what happens here is that 750 tokens are taken out from the liquidity pool, right? And that normally would go to the token holders. But because there's a 4% fee, so 4% fee from the 2,250 tokens that are bought is 90 tokens, and that goes to the rewards fund. So people will get 990 tokens. So the amount of tokens held in people's wallets after the first day is 4,160 tokens, and this will be important later. And so all in all, after 24 hours, the amount of tokens held in people's wallets is 4,160 tokens, and the amount of tokens in the rewards fund is 3,500 plus the 90 tokens, and the amount of liquidity in the liquidity pool is now 750 tokens in the liquidity pool. And let's continue this example here. Let's assume that all holders unrealistically used all their spending limit, 2% spending limit for this example, to see how sustainable this actually is. So let's go forward here. If they use the whole 2% cap here, that means that all the UNDG tokens that people have in their wallets is 4,160. If you times that by 2%, you get 83.2 tokens. And this amount of cashback is now rewarded back to the token holders. So here, this is the final amount of tokens in the rewards fund. And the rewards fund is critical that it is sustainable. So after the first day with that example, the rewards fund actually went up from 3,500 tokens to 3,506.8 tokens. So what this means here is that the rewards fund actually increased by 0.19%. They have 4 other examples. I will quickly go through them, and then I will talk about the downside of this token as well. So here, first example is that let's take the same example as we showed before, but now 1,000 tokens are bought, 500 are sold. There's a 4% fee from the 1,000 tokens here. That means that 40 tokens, is the fee. So the amount of money in people's wallet is 3,500 plus 460 tokens, which is 3,960 tokens, as well as the new amount in rewards fund is 3,540 tokens. And after people spend money for gas fees and get the cashback, if they actually use the whole 2%, then the rewards fund will actually go down by 1.12%. So there's a chance that the rewards fund is also going down, depending how much people actually use this. So it can go down. So what it says here is that it is unrealistic to expect that everyone will be using the whole 2% maximum cap, because there are people who want to trade this thing even if there's the 4% fee, because they think this can go to the moon or something like that. And there are people who just hold this token large amounts because they want to hedge themselves against rising gas fees. And there are people like me who do trades inconsistently. So let's say I do a trade every 2 days. I basically, on average, use 1% of the total value that I could gain. So on average, it is more realistic that people use about 1% on average. The holders use 1% on versus the 2% cap. So in that scenario, it is still sustainable for this example. But for this example, this is the same example as scenario 1, except now the numbers are doubled here. So you use 2 times more buying, or there's 2 times more buying than selling. So in this example, the fee is $80 or 80 UNDG tokens, and in this example, this is sustainable on the first 3 tiers, but unsustainable on the 4th tier. And scenario 3, they actually flip this around. So now there is 2 times more selling than actually buying. And even in this example, this is still sustainable if people spend on average 2.5% for gas fees. And these 3 levels are unsustainable in the long run. And in scenario 3, it is the same exact example as scenario 4 is the same example as scenario 3, but in this example, these numbers are again doubled. So 2 times more selling than buying. So for this example, again, on the first 3 tiers, this is sustainable. So the downside here is that this is sustainable as long as there is buying, because whenever there is buying, there are fees. So that's the example here. And all these examples, they do not take into account the 10% claiming tax because many people will not use a referral link. So for that reason, they will get more money that is in this example as well. So as long as there is buying, I think this is sustainable. But this will also become unsustainable when there is enough scaling for Ethereum. So when the Ethereum 2.0 scaling finally goes live, this token basically becomes irrelevant as well. So I think this token, at least in the first 2 months, it is sustainable for sure. But after that, it becomes a little bit riskier. But I do believe many people want to hold this token even though they know that eventually this token will become useless, just because they want the gas fees, cashbacks immediately. And because it has a limited supply of 10,000 tokens, I do believe that this token actually can go up significantly. I have no clue how high, but I do believe it has a chance to go quite high for this token as well, because people want to get the cashbacks and the utility is quite good. This is relatively sustainable, but again, I talked with the developers and they say that they can change these fees to whatever is sustainable in the long run as well. They can even lower it to 3% if they get a lot of money from the rewards fund. And the rewards fund is not used for the team. It is only used to give the cashbacks. So for that reason, this is a cool token. It is meant to help the community. And I do believe a lot of people, a lot of traders will want to have this token because it makes Ethereum almost free as well. 90% discount on gas fees is significant in my opinion. Anyway, this is how it works. If you have any questions about this, you can actually go to my Telegram group because one of the developers is in that group. So I'll make sure that your question gets answered. You can also leave your question in the comments below. And just as a final note, I want to tell you guys that unidexbot is now really good because you can get the cashback on the gas fees, as well as my favorite decentralized exchange, UNDG together with this token is super good right now, because one of the biggest reasons why UNDG hasn't been as good as Uniswap is that Uniswap sometimes has the better price than, let's say, SushiSwap. They have almost the same liquidity, but sometimes SushiSwap has better price than Uniswap. But still, it may be better to buy it on Uniswap because Uniswap is super efficient with gas usage. But with UNDG, this aggregates 10 or 16, I don't even know how many decentralized exchanges for now. So you can get the absolute best price for the whole DeFi through UNDG. And with this token, the gas fee is not an issue anymore. So this exchange is much better to use as well in the future. So that's basically my thoughts for the UNDG token and for this cashback system. Let me know if you have any questions, if you have troubles understanding something, or if I missed some critical piece of information why this will not work in the long run. So I will tell you just that in the long run, it will not work. Eventually, it will fail because Ethereum 2.0 scaling will come into place, or layer 2 come into place, or something else happens. So it can be like a medium-term play here as well to hold some of these tokens as well. Anyway, that's it for this video. Let me know what you thought about this. Consider subscribing to the channel, like this video if you thought this was interesting, and I will see you on the next video.